Hey everyone, this is Connor with Housebang.com here. We have another market update here. This is based off of the new NAR report, the National Association of Realtors, talking about the new typical home price that we're seeing in the US for May. It's the most recent data. And actually the median home price in the US is at an all-time high. It just reached that. It's about $419,000 for your typical home in the US now. Of course, every market's different, but this is the median based across the whole US. For reference, in 2020, I went back and looked, it was about $330,000. So almost not quite $100,000 increase in the past 4 years for your median home price in the US. And what's really driving this, right? I mean, you think about it, rates are relatively high, the prices, why are we seeing this? Why are the prices not moving? It's just a lack of inventory, which is driven by people who don't want to give up the rates they're at a lot of the times. If you're a cash buyer, it doesn't quite affect you as much. It still does though, because the prices are still going up slightly. And if you look at it in the past year, in majority of markets, prices have went up slightly. That's probably a good estimate of what's happened in most markets. Every market's different, but they're going up slightly or they're decreasing slightly. They're not really doing anything drastic like we saw in 2021, but they're moving around slightly. But the thing is, the rates are still kind of high, and that's really what's making it challenging for a lot of home buyers. I went ahead and looked at this, and for a $420,000 home, I went ahead and rounded it up at 7% interest, which is about where we're at. Of course, it fluctuates on a weekly basis, but that's really about where we're at. It would be about a $2,900 payment. That's for your principal, mortgage insurance, your PMI, and interest. Just those, I didn't add anything else. It'd be about $2,900 a month for your standard home in the US. And PMI, that's just your mortgage insurance. A lot of times when you finance a property, right, that's going to be tacked on there. Well, we can talk about that in another video, but it'd be something you'd see, and usually until you reach about 20% equity in the property, then you can get your lender to remove it under a certain time restrictions as well. So we can go in that another time, but it's about $2,900 per month for your standard home in the US. That was kind of the main point we're here to make. And this is an interesting statistics too, from realtor.com. I believe they got this from the NAR report as well. That May, last month actually, would be the 11th month in a row of price increases. So it's still, these aren't like massive increases. It's not like it's doubled over these 11 months, but they're still going up slightly. So 11th month in a row of these median home price increases. And actually last month too, in May, this is an interesting statistics, that 28% were cash buyers for their properties, which for me, I thought that was a bit higher than I was expecting. I didn't think there was that many people buying cash for properties. But once again, this is where we really need to advocate for these prices, especially for a lot of younger people too, where they don't have equity built up in a previous home, maybe especially for first-time home buyers. If you're a first-time home buyer, which really could be any age range, if you're a first-time home buyer and you don't really have equity when you're selling your property, you're selling a property, you're taking your equity and you're buying one, which is a lot of times what happens in these cash transactions. But if you don't have a property, you're a first-time home buyer, you're not getting equity from moving out of your apartment really. So this is why we need to get the rates lower. We need to get the prices, which they will take care of themselves a lot of the times, in relative to the rates, but we need to get these rates lower, to help this group of people, to help the first-time buyers, to help, a lot of these people who don't have the equity yet to, avoid the rates and buy cash. And, what's the general thoughts about this? And this is what my personal notes were, that if the rates get lower for people, it'll get rid of some hesitation by many to move. So, we have low inventory right now, but if the rates get lower, there's less hesitation to move because people aren't as concerned about, taking on new financing if the rate's a lot more affordable in relative to the prices. So what I actually wrote here was, if rates get lower for people, it will get rid of some hesitation by many to move, since people will be less concerned on applying for new financing. Rates get lower equals more supply. That's exactly what I wrote over there, which I guess I could have worded that a bit better. But essentially, if the rates get lower, it becomes less of a financial decision on whether people want to move or not, and there will be more supply. So think about this. If you're, let's say you're at a 3% mortgage, you're hesitant to move because you're like, I'm at a 3% mortgage. I really don't want to finance a home at 7%. But, let's say rates go down to 5%, 3% to 5%, I think I might be willing to do that more the closer that gap gets, the more people who are willing to kind of take a slight increase in the cost of financing makes it less of a financial decision. So rates get lower, I think we'll see more movement. I would really like to see, rates at least, get down to ideally right in the fives would be just amazing. But we'll see what happens. That's just our market update. And of course, I hope you all enjoyed. If you have any real estate news that you'd like me to talk about, I'd greatly appreciate if you recommend it. Always looking for recommendations. And of course, I hope you have a great rest of your day.